I think we can start the section. Minamai, shall I start the session now?
Yes, please. I think Mr. Charles is waiting, so we should start.
No, I'm perfectly fine. So whenever you guys are ready, I'm ready.
Okay, I think we'll start because we always say that we should start on time. For people who come on time, it's they should not have to pay the price for those who are late. So we'll start. The others will join.
So good evening, everyone. So today we are gathered here for the 99th episode of Industrial Connect series. Financial technology, better known as FinTech, is used to describe new tech that seeks to improve and automate and deliver the use of financial services. So, are you curious about how to prepare a career in FinTech? So today we have a special guest who will be explaining about the career opportunities in FinTech. He is the Vice President of Customer Success at Zafin, an award-winning FinTech SaaS product company. Let's welcome Mr. Charles Dominic Raj. Welcome to the session, sir.
Thank you. Thanks so much. Thank you.
To give an introduction about the session and about the speaker, I would like to welcome Ms. Meena Nair, VP and Head of Operation and Learning and Development, SkillActz. And finally, I would like to welcome all the participants who have gathered here for the session. And students, please note, in between the session, we will be sharing a Google form. So whoever joins and whoever participates, you can fill in your name in order to get the participation certificate. To you, Meena ma'am.
Yeah, hi, good evening, everyone. It's a pleasure to be here. Bakir, I think you missed Mr. Afzal Abdul Khani. He is the person who has helped us to get Mr. Charles here. So I warmly welcome both of you and all those who may be on YouTube watching live stream of the same event. It's my pleasure to welcome, not just welcome, but also introduce the guest speaker that we have today, Mr. Charles Raj, who is with Zafin, which is a fintech company, as it has already been mentioned. It's basically headquartered in Canada and provides services to banks and financial institutions across the globe. Mr. Charles is a chartered accountant and he's got 25 plus years of experience, and it's a very broad experience in banking, digital technology. He has performed varied roles in implementing strategic business solutions, including large core banking and digital product and pricing transformations, and this has been across the globe. So he's also the fellow member of the Institute of Chartered Accountants of India, and he started as a chartered accountant. Yesterday, when we had a conversation, he said he's from chartered accountancy. He also learned about technology, and he's as good as the IT graduates who have come out and who have worked with him. So he is the right person to tell you about the kind of opportunities which are there, the kind of preparations that you have to make. So I won't take too much of time, but I welcome Mr. Charles Raj and Afzal, whom I have known for some years now. So both of you, welcome. Afzal is the director of HR at Zafin Labs, Zafin, and I welcome both of you to our session. Thank you so much for coming for this session and giving the students an overview of what all they can expect other than the regular IT jobs they usually look forward to.
Thank you, Meena. Thank you so much. Afzal, again, would you like to have an opening remark, please?
Maybe you can start, Charles. Go ahead, please.
Hello, everyone. Welcome to the session. As the introductions were made out, I'm Charles. I'd like to share with you a brief PowerPoint that I prepared, and would like to share with you how the experience was in terms of working in a fintech, giving you a little bit of background about what a fintech company is. As you are in your last end of your studies, you'll have various hopes, ambitions, and you'll have a lot of questions as well. So I'll try to finish my presentation within half an hour to 40 minutes, and then we'll keep another 20 odd minutes for your questions. And even after the session also, if anyone has any questions, please feel free to reach out to us. So in my career, the last 25 years, as it was read out, I had very great mentors. I started as a chartered accountant, but end up as a techie working in a fintech company. It has been a great experience, but I had very great mentors whom I was very humbled to work with. So always coaching and mentoring other people has been whatever I could do back in terms of return to what I got from my great mentors. So we'll start the presentation. And to begin with, a fintech company as a definition is a company that uses technology to solve some unique problems in the financial space. So we'll talk about a few companies in detail as we get to the other parts of presentation. For example, even if you use a Google Pay to pay your friends, it's a fintech company. The reason why we call Google Pay as a fintech company is because obviously it's not a bank. It does not have a banking license. You cannot open a deposit with Google Pay. You cannot get a loan from Google Pay. Although in the future they may get you some buy now pay later loans from other fintechs as well, but they are clearly not licensed to take a deposit from you as a bank would do. So we call these companies fintech companies. PayPal is another example. So similarly, we have fintech companies that without knowing that they're fintech companies, we have been using their services because they are more fun to use and they are more simple and easy to use. So that's a fintech company. And the fintech company has a wide range of business models. We will see in the coming slides that some of them are B2B, B2C, and so on and so forth. So to begin with, this is the very simplistic definition that we can have. A company that uses technology to solve a financial services problem, a problem that is faced by the financial services world. So as we move on, in terms of the continuity of a fintech, what are some of the areas in which the fintech is operating? So these are some indicative areas that we have given here. On the left-hand side, you see the, are you able to see my cursor moving? So you have the deposits, loans, credit. These are some of the financial institutions operations, which sometimes a fintech takes as their problem area and solve a problem in that space. And what they do in that space is sometimes they help in authenticity of the customer, sometimes they help in doing transfers or storing information or lending. They do a whole range of operations for these departments or for these products or for these verticals within the financial domain. And some of those unique verticals are payments. Like I said, Google Pay is an example of a fintech company in the payment space. On the wealth management side, I don't know if you heard about it. There's this company called Zerodha. So if you're into savings and if you want to buy shares, mutual funds, Zerodha is a fintech company in that space. Paytm is another company, but of course Paytm also has a banking license to take a small finance banking license that they have from the RBI. But otherwise they qualify for a fintech company as well. PhonePe is another example in the payment space. So these are some of the spaces that they take, identify a unique problem in that space, and they solve that problem for the customer or for the institution. So as we move on, what are the things that they do? What are the problems that they solve? When we say the fintech space has a problem, right? Why does it have a problem in the first place? Because those problems are solved by these large companies like banks, insurance companies, 20, 30 years ago. So if you look at back in my student days, and when I was a school student, if you want to go and deposit a check in the bank, they used to write it in ledgers. And they used to put physical pen and paper entries. And what happened is after that, when technology and software came, they literally moved those books and ledgers into the software systems with COBOL and other languages of the old. So they had a very archaic way of doing things, and they moved like for like those things into technology. But now new technology has come in, so the old technology has become a problem. So instead of trying to rearrange the old technology, which is costly, these fintech companies use new latest technology to quickly and speedily solve those problems, which those large companies have tried to solve over the years. So sometimes they make things faster. Sometimes they make things cheaper. Sometimes they just make things frictionless. To give you an example, I don't know your millennial, post-millennial things. When I was young, the first bank account that I opened, I had to fill up scores of forms. They take at least 10, 20 signatures in various forms before they could give you a bank account number. But today, just using a mobile, you have to take a few snaps, photo of yourself, you have to take a few forms, and then in 5 to 10 minutes, you have bank account number allocated to you. So that's frictionless banking, which is a fintech space, which is adopted by the traditional banks. So if you look at in the UK and in the European world, this technology of offering account opening services through mobile was first brought by fintech companies. Then the banks saw that benefit and adopted it within themselves. That's called the neobank. So the neobank is a bank that tries to disrupt a bank by creating digital-only apps and digital-only platforms. So this is the overall problem that they solve. They make it faster, better, cheaper, sometimes even free also, so that the customers directly enjoy it or the financial service institutions enjoys those services. And sometimes they eliminate middlemen. In some of those industries, because the problem has been solved over many decades, there are a lot of middlemen institutions which eat up a lot of fees and charges. Sometimes they disrupt that. Zerodha is one example, whereby they, and in the non-financial space, a similar example is a no-broker company. So if no-broker is solving something for the financial space, they will become a fintech, but they are in a different space, real estate and property space. So where the middlemen used to enjoy a lot of commissions and cost, they cut it out and through a digital technology solve the problem for them. So similarly, in the payment space also, there are a lot of middlemen when you look at international transactions. If I want to send money from here to the US, I'll have to go through a correspondent bank who charges some fees. So sometimes there are new technology fintechs that solve the problem and they just take a very, very tiny commission, which is nothing compared to the bank fees, and they remit the money to them. So these are some of the values that the fintechs create. And as I said, the fintechs have different models. So one is a B2B model, which is business to business, and the other is a B2C model, which is business to customer. So business to business model is where a fintech company creates a product or a service which is used by another large company. A B2C model is whereby a fintech creates a service which is directly supplied to the customer. I'll give you just an example. Most of us may use Netflix or other OTT platforms to view movies and other entertainment. So if I create a streaming software which only does very efficient streaming using latest technology, I sell the software to Netflix. What I'm doing is I'm doing a B2B service. Netflix as a company is paying me money to use my software. That is software as a service that I'm providing. So they pay me a license or a subscription service for just the software alone. That is B2B model. But what Netflix charges from you, instead of Netflix, if I create my own OTT, if I say, Charles movies, and if I collect money from you, that is subscription revenue for you, not just software money, that's business money for you. Of course, I have to pay for the content to producers and other things, but if I have B2B business, my income is only software revenue, money for the software that I provide. If I have B2C business model, I get subscription revenue for a business as well, not only for the software, but also the business that I'm running. So these are the two types of fintechs that we can see predominantly. And Zafin is a B2B business model, whereby we create products which is used by banks and financial institutions. Google Pay, as I mentioned earlier, is a B2C model. So Google builds that app, and you can download that app as a customer, and Google directly serves you as a customer, which is a B2C model. And so we have seen in terms of technology, what do they do? What problems do they solve? They simplify, make it faster, better, cheaper. And they form various models, B2B and B2C models in terms of fintechs. In addition to these two distinctions, there's a third distinction as well. So when we get into much more closer detail, we classify those fintechs again into big data and analytics fintechs, service aggregators, freemium business models, multi-sided platforms, and digital tech disruptors. So what's a service aggregator? A service aggregator is someone who does not have the product of their own. They rely on a group of service providers and they bring them together on a platform. Take, for example, Bank Bazaar or Policy Bazaar. What they do, they don't sell insurance policies or they don't sell loans, but they can list you 100 personal loans from 100 different banks. So that's an aggregator. Like in non-financial industry, if you look at, for example, Oyo rooms. So wherever you go, you can easily book through an app. Or Red Bus, for example, if you want to travel through bus, there is Red Bus. Or if you want to get a hotel, there is Trivago. So these are generally called aggregators. In financial services, FinTech also, there are aggregators. Like Bank Bazaar, Policy Bazaar, these are what we call as aggregators. And then we have the freemiums, which is something like Zerodha or some of these services. They start with free, but then if you want some specialized services, they charge you premium for it. That's a freemium model FinTechs. And then we have multi-sided platforms. So multi-sided platforms is something where there are certain peer-to-peer lending apps whereby they collect money from different people, crowdfunding platforms and things like that. So on the one side, you have the applicant who is applying for a loan. On the other side, you have same people who are willing to lend money, and then it takes money from the lenders, gives it to the guy who wants the loan, and then it appropriates the interest and everything. So these are some peer-to-peer lending FinTechs are also there, and we call them multi-sided platforms because borrower, lender, plus other legal agreement drafting lawyers and other people can also be brought in. So it's a multi-sided platform. And then we have big data and analytics. So we have certain companies like Perfios. What they do is they take very large data, like credit score, for example, and then they give you, if you want to apply for a loan, they give you a credit score based on which a loan can be dispersed to you, for which they analyze a whole host of data, not only your personal data, they also take statistical data. Or for example, insurance companies, they have this actuarial science, actuarial valuation. So if you ask for insurance, life insurance for a premium, the premium is actually calculated and dictated by a huge actuarial science. They look at statistics of people. If you take a critical illness cover, for example, for some critical illness, so they find out for this strata of population living in this geography, how many of people have the probability to get this critical illness, and then they work out a score based on it. So these are called big data science, big data analytics FinTechs. And then we have the digital tech disruptors, who just bring in technology and totally change the way the world works. An example of this is Bitcoin. Totally new distributed ledger technology, which created a digital coin which could be mined by solving certain mathematical problems. And people just started using it. And then we'll see in the story what Bitcoin did. So these are the general types of FinTechs, looking at it in a little bit more deeper level. Service aggregators, multi-sided platforms, digital tech disruptors like Bitcoin, and big data analytics companies. Now moving on, I'd like to just provide you with a small event, a historical event that just happened. In the human history, gold is the most valued metal. Almost we have 4,000 years of history of gold being used in various places, like for coins, for trading, for ornaments. There are songs sung about it in ancient Tamil literature or Malayalam literature about the king wearing gold and everything. So what you see here is a chart of the gold price trend, how the gold price has varied over a period of time. So if you look at it around 1980s, there's a slight peak in the price initially. What happened in the 1980s is the US economy went into a huge recession. So there was a Great Depression in the 1930s. After that, there was a huge recession in the 1980s. So when the recession happened, the most safe and secure means of investment of spare money is gold only during that time. So people invested in gold, so gold price went up because a lot of people are buying gold. The demand and supply worked. And then after that, the gold kind of stabilized. And then later during 2008, when the financial crisis happened, when the meltdown of the US happened, Lehman Brothers collapsed. So a huge event during that time. 2008, the gold price rised again. And then again, it went up in around 2011-12 because of the Eurozone crisis. a lot of countries in the European Union had to be bailed out by banks supplying money. So cash was not considered safe. The stock market therefore did not perform well. And then people resorted to the refuge of having gold as a safe, secure investment to protect money and value. Now, 2010, the European crisis ended around 11-12 by a lot of countries being bailed out and everything was settled. Then the price receded. And then came 2019-2020, coronavirus, COVID crisis. Now, a lot of experts predicted that, look, gold went up even in 1980 to this extent. And European Union and US were only a single country, single economy, or maybe a few economies, not the whole world crisis. It was just a regional or pocketed crisis. And still, for that itself, the gold price went so high. Now, coronavirus is a global pandemic. Every country was affected. Every economy is affected. So they said the gold price will increase 3-4 times from here. But unfortunately, it did not go. It did not even go up to the level in which it went to the Eurozone crisis. So what happened? So instead of gold, for the first time in human history, in 4,000 years, people started buying Bitcoin to keep their money safe and secure and to keep it anonymous. Because gold also had its hassle. If it's physical gold, you'll have to store it in a locker or something. If it's electronic gold, the income tax authorities will know about it and you'll have to pay income tax if you buy electronic gold in the stock market. So people went and bought Bitcoin, which is anonymous. You can keep it and then trade it and sell it later. So if you look at the growth of Bitcoin, which is shown in the graph below, from 2020, after the coronavirus crisis happened, it went multiple times. So that actually proved that it is the digital gold for the coronavirus crisis. And then at the end of 2021, in terms of asset class performance, the maximum returns that people got was from Bitcoin. Even gold and other stock markets were way below it. So this is what technology and the innovation in terms of digital disruption does to the market and the behaviors. If you look at back in the day in 2014, this Bitcoin was just created as a research project. Nobody knew who the founder of Bitcoin was. Just a name, Satoshi Nakamoto, was given. Nobody knew who this Nakamoto was. People speculated that it could be this guy, that guy, but nobody had a clue. So, excuse me, people did not even know who the founder was. And then suddenly, in a matter of 10-15 years, that became as good as gold. So that's the power of the technology and the people's trust towards technology. So let's take the case of India with respect to Bitcoin. Now, on the graph in the left, you can see all the various countries which are there either exploring Bitcoin-like digital currency, the cryptocurrency, or already launched it, or in the process of launching it. And except a very few countries, you will find every country has its own roadmap. In India specifically, in 2013, when these cryptocurrencies started to come up, our RBI, the Apex Bank, cautioned us not to invest money in these currencies. In 2018, they gave out a circular saying which is barred to trade in cryptocurrencies. And our financial ministry also supported that. And in 2019, there is a bill which is passed that banned on private cryptocurrencies. But in 2018, the circular that came in to bar was challenged in the Supreme Court. And the Supreme Court upheld the challengers' petition. And then they said RBI did not have the territory to or the authority to ban a particular trade event. And then they reversed the RBI circular, whereby in 2021 now, the government itself is considering launching a cryptocurrency on its own. So if you look at India, we took a complete U-turn post the COVID crisis. After seeing how Bitcoin has been used and accepted by the whole world, now we have to start embracing that. So that's how the old systems change to accept new technologies, which is where the FinTech space plays into. So as we move along, of course, Bitcoin also has its challenges as it grows. The mining costs a lot of electricity because the data centers and powerful resources will have to solve complex mathematical problems with large prime numbers. So sometime 4 or 5 years back, I read that prime number which is used to solve is around 200 pages if you write it in a book. So it becomes more and more complex to solve and extract value out of the Bitcoin mining. And the Bitcoin mining electricity that was consumed was even larger than some other countries' electricity consumption. And that caused some sustainability and CO2 problems, whereby now the Bitcoin has changed some of their, or the blockchain network has changed some of the validation mechanisms to use lesser electricity. Rather than creating many nodes, they reduce their gas fees, everything. So that way, even a latest technology like Bitcoin also, when it is used, it will have its own challenges which has to be solved, which is also squarely in the fintech space to solve it. But however, if you look at the graph on the left, the banking system uses way more CO2 emission, and the gold mining uses a little bit lesser now than Bitcoin. So still, there's a lot of ways to catch up. It is not as bad as how the paper currency and other currencies use carbon emissions, but still, even now itself, it's seen as a concern to take early measures. So similar to what you've seen, so B2C and B2B models. So Bitcoin is a B2C model where they directly, you as a customer can go and onboard yourself onto the service and enjoy the service. So B2B model, as we said, they create a product or a service for other businesses to solve. And B2C model directly goes to the customer. And the value propositions are different. So the B2B model tries to enhance their product, keep their product life cycle more latest. So if you have careers like product managers, right, sales and marketing for B2B, that's a different skill set and a different way of forming the organization. If you look at the B2C model, you have various skill sets like customer onboarding and so on and so forth, which takes care of the staying relevant and close to the end customer. So the end customer, if it's an institution, it has a certain hierarchy in which an organization builds itself against. If the end customer is the individual person, they make their organization so close to the persona, or the type of personas will be using their products and services. Now, coming to banks, sometimes we said the fintechs serve the banks, or the fintech itself tries to replace the bank, which is a new bank. So what are some of the SWOT analysis of the financial institutions in the finance space, where the fintechs come in and try to play a role? The banks have their brand names well established because they are licensed by the RBI to take deposits. There's a trust that is created when it's a bank, because you put your money in the bank. And second strength is they have a large existing customer base. So banks already have a very large customer base. So if they cross-sell and upsell to the existing customers itself, they get a lot of new products being sold. They don't have to hunt for new customers, especially the established banks like HDFC, ICICI, SBI. They have a huge customer base. If they just keep the customer base and try to sell new services to the existing customer base itself, they can make a lot of revenue. On the other hand, if you look at the weaknesses, sometimes they have huge brick and mortar establishments. Brick and mortar, when I say, they have large bank branch networks, large ATM networks, which requires physical upkeep, the lighting, the AC, the physical security, the upkeep of the physical infrastructure itself is very costly for them, which is where neobanks try to disrupt it, because neobanks only one app you have to develop and maintain. You don't have to pay rent for the space, you don't have to use the furniture, you don't have to use the AC, nothing. So, and one of the threats for the traditional banks is there's almost in the digital world, there is zero customer loyalty. Because I'm banking with 10 years, tomorrow if somebody gives me a better service, they easily switch over. Like you switch from Netflix to Amazon Prime without any qualms. You're not loyal to Netflix because it's showing you all the. Yes, if one of your greatest star movies, Mammootty or Mohanlal movie is not coming in Netflix, you immediately switch over to Amazon Prime wherever it is shown. So that way there is no loyalty in the digital world. So that way banks have to be careful in retaining the customer base that they have. Whereas if you look at fintechs, they have just one easy to use app. They don't have a huge infrastructure in buildings, rents all over India, which has to be maintained, leased, renewing, upkeep of the property. They don't have all such expenses. They only have technology expense to take care of. And on the other hand, they don't have a huge market base, so they have to capture customer. So they spend a lot of money on onboarding new customers, advertisement campaigns, and so on. But their opportunity is a large market potential. So every customer who uses the traditional service is their potential customer. And their threat is their technology can be easily adopted by banks. Like the example that I said, in Europe, the digital onboarding to a bank account, somebody opening a bank account through a mobile app was brought by fintech companies. Then banks quickly started to replicate that technology, develop the technology internally. That way, they also offer the same service and retain the customer. So there's always this this threat of either another fintech copying their solution and or coming up with a better solution, or the banks just taking the idea and developing it internally, or even acquiring other fintechs that has equal capability and challenging the position of the fintechs. So as we move forward, when we work in the fintech space, one of the key things for the builders who want to build a career in fintech to understand is that you don't have to solve all the problems, technical problems yourself. There are a lot of problems that are already being solved by the external market and available to you in the form of APIs. APIs or application programming interfaces, which you may very well know. So in the case of an example that I've shown here, which is a stockbroking app, like Zerodha, for example. A stockbroker app, as long as they have native connectivity to the stock exchanges and the way in which they maintain the customer accounts, which is their core, the customer and the depository accounts that they maintain, as long as they have an application to do that, all the other satellite services like digitally KYCing a customer, authenticating a customer, using a digital signature to get signs on various onboarding documents, account opening documents, your depository documents, all that could be solved by companies like DocuSign, like eMudra for digital signatures, your document wallet, which is offered by DigiLocker, your Aadhaar stack, which authenticates an individual customer. And then if you want to send SMS or emails to customers, there are Twilio and other communication platforms which are available for you. For easy payment and usage, there's UPI interfaces available for you. So if you are having a fintech company, what is the core business proposition? The core alone, the company needs to take care. All the other supporting services or the infrastructure is already solved by external parties. So sometimes you have to keep our eyes open to find out these parties who are non-competing and integrate with them. Sometimes the parties with whom we partner with today can become our competitors tomorrow as well. So those are the things where the fintech company is always careful about whom they partner with. So if they partner with some of the companies who also have an ambition in the similar space, if they suddenly build a similar module, they can quickly siphon out customer data very easily through APIs. So which is where there's a lot of thought and strategic direction that goes into how do we solve some of these problems using external APIs. So understanding of the API ecosystem and the API economy is key for people working in the fintech space. So what are some of the emerging technologies? So the topic that's more interesting for you. So a lot of buzz is going to be next 12 months in these three technologies, that is blockchain, AI, and with 5G coming in as well. So I've narrowed down on these three. So cryptocurrency or blockchain technology, 5G and AI everywhere, and personalized intelligence services. So that way the personalized intelligence services covers a wide array of functions which could help in personalizing a particular service or a product for a customer. So if you look at some of the recent blockchain fintechs, there are aggregator apps whereby you buy any cryptocurrency, be it Bitcoin or any other currency, you can store it in a common portfolio. It's like an aggregator app where you can store it and you can even borrow money out of it, or you can sell it back, transfer, exchange, and so on. So UniLend is a lending platform to lend and borrow using cryptocurrencies. And Crypto is where you can store all your cryptocurrencies and use it to trade or buy and sell. And then there is low-code and no-code platforms which have come up for blockchain as well. So NFT Kelly is a no-code platform which you can use to create your own, application and put it in a metaverse as well, marketplace metaverse as well. So we have these various types of fintechs that tries to capitalize on the blockchain technology. And then the traditional banks and insurance companies as well have started adopting blockchain. So if you look at AXA provides a flight insurance, whereby if your flight gets delayed, they pay you a certain money to cover your stay cost and other, your flight gets delayed or cancelled. So what this AXA does is they use a app called Fizzy, which connects to the flight information through blockchain. And then the moment the flight schedule gets delayed or cancelled, automatically, without any human intervention, automatically the funds are released to your account. So that's how quick, using smart contracts of blockchains, they've done it. And then there's another company called Baton, Core Liquidity, which is solving cross-border liquidity payments across banks. So that is a company that started using blockchain to transfer money from one bank in one country to another bank in another country. And they started and they were coming up, and then suddenly HSBC and Wells Fargo said, please, we also want to use your services. And they both subscribed to Baton as users to solve the problem. So Baton, they said the typical transactions fee, the time taken to send the money and receive money, everything is simplified and solved very easily using blockchain. And again, with the AI, so with Bitcoin, we have seen how it replaced gold. With AI, there's a lot of innovation that's yet to happen. So we already see some apps which have embedded AI in it. So any app in which you open, the first few questions asked by the customer support is from an AI bot. Only after the 5th or 6th response, it will put you onto an actual person. So natural language processing, low code and no code environments for doing AI native apps, and embedded apps will be, we'll see more and more of those coming in. So blockchain and AI will have a lot of skill gaps as well, which if you focus on, you can do a lot in the fintech space as well. And like I said, AI also has come up with this deep fake and metaverse with Facebook's Meta and the programmable world concept, whereby virtually you can have a connected world and you can have a lot of interaction experience through the virtual world. So today you see me just as a video. If you walk in metaverse, that can be a complete 360-degree view with like a virtual office room where you can walk and interact with people and so on and so forth. So what the AI deepfake technology did was they created various TikToks using Tom Cruise, whereas actually it was not Tom Cruise. It was done by some other guy. If you look at the TikTok videos, you cannot find out the difference. You will think that it's actually Tom Cruise doing it. So these are some of the technologies that are coming, and this combined with metaverse will be able to do a whole host of new interaction services. So the Zoom meeting, the Google Meet that we do, probably in the next 5 to 10 years, we'll be meeting in metaverse, and we can literally sit in a conference room and address as if we are physically in the place. And for example, somebody just quoted all the photos taken, and they said 3 of these photos are fakes. Find out what are those. And then for me, I looked at it and I couldn't find out the difference. So AI is maturing too close to reality. And this is done by a company called Metaphysic. And what Metaphysic did was they went to America's Got Talent, and 3 guys, in front of them they have the cameras which took their recording, interpreted that using AI, and put the judge's face on the screen behind them. So it was as if the judges were singing. The lip sync was so perfect, and the judges were totally amazed. They said, "How is this possible?" And then this was done through deepfake and AI algorithms matching the face and the behaviors. So this is something that's going to evolve more. So blockchain and AI will be two critical phases in the fintech. So using these two technologies, banks, financial institutions will now have to rethink their products and rethink their services. How wealth advisory is provided, how various life insurance and other financial education can be given to people will all become reimagined using these technologies. So what is more interesting for you specifically is that the digital transformation is going to keep on happening. Newer and newer banks will try to re-emerge with digital account opening and so on and so forth. API economy will grow. There will be a lot of APIs that will come and solve a lot of problems specifically which can be used. Artificial intelligence is going to always be on the uptrend for the next few years. Blockchain and smart contracts will develop to solve unique and critical problems in the fintech space. And the good news for you is, this is a slide that I prepared specifically, that I included specifically for your grasp, is that 91% of fintech employees are from technology background, which is what the users call STEM, which is science, technology, engineering, and mathematics. So if you are engineering, technology, science student, it's your world. And if you are young especially, you may close to 94, 95% of the population. So people like me, 10, 15 years plus experience is becoming lesser and lesser. So the average age of the fintech space is very low. So that's your world for you to dominate. And if you're a non-STEM candidate also, if you're a functional person, you did your BCom or BBA, you don't have to worry. Still, a lot, 9% is a very lot of space for you to operate, and it's your, there's no, barriers for self-learning in the fintech space. If you want to learn something, it's out there. You just have to have the continuous push to learn, and then you can improvise your knowledge every day. And whether you're a STEM, whether you're an engineering candidate or a functional candidate, the learning is every day in the fintech space. So as a STEM candidate, as an engineering, technology, science, and mathematics candidate, what are the two things that are now open for you in terms of the fintech space if you want to enter this space? Either you can work in a fintech company, and then gradually you can start your own fintech as well, because there are VCs, there are people who fund early startup ventures. So that's also, if you look at a lot of new startups that are coming, there are people who left other fintech and they started. So almost every founder, if you look at it, a very mature founder, he would have worked in another fintech company. And what happens is that fintech company itself provides him the support to say, go and start something. And if you're an engineering candidate, the best thing that you can do is surround yourself with a lot of functional people, business analysts, and people who know the domain. If you are a functional guy, surround yourself with engineering candidates. So that way you learn from each other, and then you get a deeper knowledge about the particular space, the industry in which you're operating, and try to find out some unique point in the industry which could be made faster, better using innovation and technology. And try to get a deeper understanding of the domain, which will really be helpful for you. So I, as a chartered accountant, the initial 5-6 years of my career, I only had engineering friends around. So in our coffee chat, in our lunch break chat, everything was about database, Java coding, and things like that. So what an engineer learns over 4 years, I learned over the 6-7 years that I initially interacted with my engineering friends back in the day when I started my career. So likewise, if you're engineering, find a good guy who's got very good understanding of the banking domain or the insurance domain or the business domain, and try to extract a lot of knowledge and understanding through him. Again, the fintech has various life stages. So they start a product, they create an idea, then they do a prototype, then they start to test it out in a few geographies in a very limited way, then they expand into business. So when you join a fintech, you can join in any one of these business stages. If you join early, you get stock options and all the other things that comes, but the salary may not be great to begin with, but there's a lot of future potential. But if you join in that business expansion state, you'll be more well settled. But it depends. Both has their own pros and cons. But if you join early, you'll be able to see through the entire life cycle of how the company grows. And it'll be very exciting and a very fast-paced atmosphere for you to learn, improvise, launch and relearn and improvise, and so on and so forth. And finally, I've given some few links which you can go through, which are in the FinTech space, few research and few directions. You can just read this for just your own interest purposes, but then there's a lot of materials out there if you search. You can gain a good understanding. So one last piece of advice that I want to give as a closing remark is that whichever industry you choose, being an engineering candidate, you stick with that industry domain for a long period of time. It can be rewarding. Because I've seen people who start their career in telecom, then switch to a bank, then they work in healthcare, then they work in another sector like logistics and shipping, and then finally in 5 years they would have worked in three domains, but they would not have an in-depth knowledge in any one particular domain. So if you choose banking, stick to banking. If you choose probably healthcare, stick to healthcare, because it takes 10-15 years for somebody to get deep into the industry, understand the legacy problems, and gain a lot of advantage, which will be seen as valuable for companies. That is how my journey was. So last 25 years, I've been working only with banking technology. That way, the industry value that you bring in for the particular industry will be more valuable. So that's the close of my presentation. So I'd be happy to take any questions. I hope I'm not overshot my time that's allocated. So any feedback, questions, I'd be more than happy to take it and address it.
Some of you, I mean, those of you who are here, yeah, please go ahead. Somebody's asking something. You can either put it in chat or unmute yourself and speak. Balaji, you can unmute yourself and ask. Balaji, you can unmute yourself and ask the question. You've raised your hand, right?
Actually, what is the impact in the fintech in current situations?
What is the impact of fintech in the current situation? So
Yeah.
You're asking about what fintechs can do to the
Current trend.
Okay. Compared to 10 years ago, now the fintechs in India and across the globe have literally grown in numbers and in size. So previously you did not have Google Pay, we did not have Phone Pay, Paytm. So newer and newer fintechs like these are starting to come, and they'll keep coming. And if you look at the finance world, there's a lot still needs to be changed and disrupted. Because the banking world that we see and the banking business that's been done is at least 20-30 years old in terms of their technology and their landscape. A digital account opening in 5 minutes or 10 minutes is something that they have come now, and a Google Pay to transfer money back and forth very quickly using your phone contact book is something that they've come up with. In future, there are so many things that can happen, like your insurance claim, for example. If you take a video of your car using AI, you can analyze whether it's a real video, and immediately a spot cash can be given to you on the spot. A credit will come to you, as an example in the insurance. In the banking, there's again a whole lot that can happen, especially in the rural and the non-metro parts of the Indian economy, India especially if you look at it. Their financial technology has not really gone in. So if you look at today, you go to any village, there are very remote parts, you go and say, if you have some financial need, who do you go to? They say, there's always some guy who's a loan shark there, they go and take money from him. He charges 20%, 30%. sometimes exorbitant interest rates, right? So can those people be touched by a loan which is officially sanctioned, which can authenticate them, which can track their behavior, give us credit score for them, and help them out when they need a loan? And there are, if you solve that, there are like close to 1 billion people who will need that help, as an example. So if you look at the fintech space in India, it is only for the metro, for the segment that's already established and already enjoying financial services, they are doing all this. But for the remote villages and for the people who don't have the formal banking, the facilities for or the formal bank loans that's available, the fintech is yet to reach. So there's a lot of new age solutions that will come to address those markets as well, and to improvise the current existing services that we already have as well. So the impact of fintech is yet to be seen, and we have barely started scratching the surface if that's the answer that you're expecting. So it's a very nascent field as well. So it's got a very huge journey ahead of it.
Thank you, sir.
There was another person who had raised their hand. Yoga something. If you're there, you can ask your question, or anybody else. Anand, yes.
Yeah, hi. I have observed that the banks, the traditional banks, have been a little, behind in adopting many of the newer technologies. So, is that true? And if so, why do you think that is so? Because they have a lot of resources at their disposal, but why have they been a little behind in adopting these?
One is to say they are heavily under the scanner in terms of regulation. So if they want to change something massively, first of all, they will wait for it to be proven. Unless it's a proven, secure technology which cannot be tampered with later, they are very wary of adopting it. So unlike other industries, they suddenly jump on and take a new technology. So in the future, if that technology can be compromised, personal data can be stolen, they start from scratch again. But as a bank, they cannot do that. Their failure tolerance is very low because they are dealing with public people's money, and data privacy and other security concerns are also there. So that way, banks always cautious in adopting new technology. Maybe that's one reason why they cannot be throwing caution to them in adopting, trying something new. And secondly, if you look at it, banks traditionally have a mindset of only accepting deposits and lending. If you want to book your movie tickets through banking, all those things are now brought in by Paytm, for example. If you look at the Paytm app, you can pay anything from your phone bill to your electricity bill to everything, which other banks are now adopting. If you look at Paytm, you can do shopping and get those vouchers. You have a whole host of services. So banks like Paytm are challenging the traditional banks to replicate those services. But still, if you look at the bank's way in which it's structured, it is having a structure to accept deposits and lend, which they do very well. In terms of adopting new technologies that can push the boundary to go beyond the deposit taking and lending, they are a bit slow to adopt because of their tradition and regulatory supervision. So there's a question on the chat. What do you think might be the upcoming challenges that the fintech will have to face other than the technical ones that might have an impact on people as well? So challenges for you, for the fintech company, if you ask about the challenges, like in one of the slides that I mentioned, so they'll be hard pressed to find new customers. They'll have to grow the customer base. They don't have an existing customer base, and the technology could be easily copied or replicated by another company or the bank itself. So they lose that edge. So even if they find a niche, they could be easily replicated by other parties. So these are some of the challenges. In terms of technology also, there's a challenge because a few years, a couple of years, and the windows getting shorter. Every year you wait, you get a new version of software that are coming, which will be more efficient. Even if you take a very robust technology like Java, uh, the front end was coded in JavaScript, back end was coded in Java. And then now for all the user applications, the back end is also now having JavaScript. So a lot of companies are now trying to do away with Java and move to JavaScript and use Node.js to build their backend also. So technology also faces a challenge because of newer things that are coming in. You have to restack your entire application suddenly. Rewriting an application that you have built for 3-4 years is a huge task. It's not very easy to do, and it costs a lot of money. You'll have to retest it, you have to establish it, so on and so forth. And so the business threats and the technology threats will have to be taken care of, but that's what's making the career exciting. So if you work in that type of an environment where you launch a code, you put a new button for people to click. If people don't click the button, you take it back and you put something else there and see if they click. And if they clicks, then you try to replicate and find that similar ideas and start experimenting. So there's always this fast-paced life and activities that happens in the fintech space. In fact, it's only the fintech that did a lot of innovation in the DevOps and infrastructure side. So the continuous integration, continuous deployment, the Scrum model, the sprints that you do, these kind of jargons that you hear in terms of reducing the team size and increasing the operations, and the epics and things that you do, were all out of the fintech and the startup world. Traditional companies had the waterfall method. You plan, you analyze, like how you build a building, you do one by one. Fintech and the startup companies, they changed the whole thing. They came up with all these things. Now larger companies are also adopting those. So that way, the challenges will keep on coming, like new technology, new business model, and staying relevant and unique. And they'll be solved through various ways, through various brilliant minds working in the fintech space, as in other industries as well.
Amin, please go ahead. You have a question?
Yeah, so that's a very good question. So if there's a company that's going on and suddenly there's a ban from the government saying you can't do this business, then that's one of the challenges whereby the company can innovate and change and work through the regulators to establish themselves, or they can switch their business model and become a software as a service company and provide the software to other eligible entities that can do the business. To give an example, Uber, when they first came up, the lot of companies, the taxi associations, they banned Uber, and then they reorganized themselves and said, we are not a taxi company, so you can't regulate us, we are a software company. And then they changed the structure, and they've been trying to work with the system for a long time, and eventually they became successful. So these newer and newer challenges will pose a lot of innovation and skill from the senior management of the fintech to navigate through these challenges. And the end, how they win is dependent upon how their perseverance is, how they're able to continuously innovate and continuously stay on the edge. So either if it's a total ban, you can't do anything, then you switch to a country which allows you to do that. For example, the Lithuanian countries were very free to do Bitcoin, so a lot of people use Lithuania to host their cryptocurrencies, and a lot of people from the US park their money under the radar in Lithuania and other countries as an example. So either you do geography switch to the place where you're recognized, or you try to work with the government and amend yourself to keep the business running, or you sell your service as a software as a service to other companies that can legitimately do the business. So otherwise, if you are able to create a unique technology value, it will always be sold one way or the other, depending upon how the leaders or the business wants to navigate. Yes, yes. Mm. Yes, yes. In fact, a lot of fintechs have solved problems in a very innovative way. The small finance banks, the small bank license, it does not allow you to keep more than 1 lakh deposit in your account. So if you're putting more money, what they do is they have tie up with another bank. They open a shadow account and they park the excess money there, and then they bring it whenever you want to use it. So these are some of the examples in which people solve various problems. So these challenges only brings out the innovation in the team, how they're able to think through which approach and strategy they are able to take and emerge successful, which is really an exciting path in the fintech space.
Charles, there is another question in chat.
Yeah.
Have you seen it, or should you want me to read it?
So,
What would be a major skill?
Yeah. Leading a successful career. So, skill set. There are two things. So, skill set in terms of technology is something you can easily learn as an engineer. So, skill set as understanding the business domain and the challenges in the business domain, and your ability to spread across your skill across various aspects: customer experience, UI and UX, uh, visualizing the ease of using the app in the context of the business, understanding the data models and the background data architecture, um, and if you are slightly want to operate at the architect level, understanding the various strengths of the technology frameworks and finding out what can work well with another technology and so on and so forth. So these are the general skill sets. The coding and the syntax will keep changing from one programming language to another. And there are some specialized programming languages. For example, Python is very good in analytics. Recently, we have seen this some time ago. This Lehman Brothers recruited Python programmers to do floor trading because they can very quickly come up with the analytics programming. And if you're doing analytics and that type of space that you've chosen as a big data, there are some niche programming languages for that. You have R, you have Python, and you have those big data analytics type programming. And then if you come to functional and other logic programming, you have Java, JavaScript as JavaScript more upcoming, but Java has been the more established one. And you have so these skill sets from a technology perspective, you can find out what's relevant and what the company's architecture has chosen, and you can learn it. But the main is for you to while you do the coding and develop the skills and technology, is for you to get into the business and understand where the money is coming from and where the money is going. So and how you can make that flow rate faster, which is what ultimately every business is all about. And if you have a sense to grasp what's getting the money for the company and what's the value for the customer that's being served and what are the nuances in that value with respect to regulations or other aspects, and then reimagining that business model in which if you can do something faster and better, that will be a very valuable skill set. So you start with being a good expert in the coding, but you spend a lot of time, in addition to being an expert in the coding, you spend a lot of time in understanding the business, the market, the other applications, and mainly the data structures and how the customer interacts with it.
Yeah. Any other questions, anyone? Yeah, please go ahead. Somebody was speaking, I think. Somebody started speaking, but
Okay.
Any other questions? I don't know whether it's my muffling sound or somebody is trying to say something.
So please say once again how to get access to the participant certificate. Okay. You will provide a participation certificate for the meeting, right? That's
Yes, yes.
you can take it. Okay.
You'll be getting that. So I think Bakir or Joel will post the link here and you will be able to get the certificate. Any questions to Mr. Charles Raj? Any other questions? Okay, there is another question from Anand.
Will UPI remain free or will companies start to charge something as well? Will UPI remain free or will the companies start charging for it? So that's a very valid point. So the ability to monetize an API is always a business decision. It is as good as asking, will Netflix charge more for the monthly subscription later? So it all comes down to volume and other metrics. But in the case of UPI, the National Payment NPCI will have to take care of that. If you look at UPI, it is running on the ATM framework, ATM switch framework of the country. So if there are better ways of transferring and tokenizing money, and they're able to make things cheaper, they may find other ways to monetize the UPI. I think still, if you look at the bank's services, the government has a very lot of control over it. So that way, what is charged and what is not charged will have to pass through a government decision.
Any other questions, anyone?
I hope it was helpful. So if you have any more questions also after the session, please feel free to reach out. We'll be happy to help.
I'm sure there will be some which may come up on the YouTube, the streaming that has happened. There'll be some questions there which we will definitely share it with you.
Thank you.
So it's been a long day for you. So thank you. And I think I'll leave it to Bakir to formally thank you. Personally, for me, I am not at all neither a techie nor a finance person. So there was a lot of learning for me in this. So thank you.
That's a pleasure. Thank you.
Bakir, you're on mute. Okay, please.
Yes,
Yeah.
So there's a lot of FinTech courses that you can do online, as an example. A lot of books on FinTech that you can read. But most importantly, you have to have a little mindset on how the business works, how money is made by the business, and how the business earns profit. So if you have a good eye for the money and profit aspects, and how a business works, what value it delivers, and what fees or services it charges for the value. If you have a good eye for that, you can pick it up very fast. So maybe I'll share with Meena and the team on a few online courses that you can learn. But the best is to surround yourself with people working in the FinTech company. Or if you can work in a FinTech company, that will be great. You'll be directly in the thick of actions. But even then, if your friends or your acquaintances are working in the company, you can learn a lot from them. Like, for example, PayPal, what do they do? How does a payment gateway work? How do they simplify things? And so on and so forth. Yeah, as you mentioned, there's a question on the chat. FinTech are not popular rules in semi-urban areas. because lack of knowledge, the complexity is a challenge. Due to various reasons, because if you go rural, there is vernacular, right? I think an app with full menu in English. So it will have to be solved in a different way. If you look at Kenya, many years ago, Kenya solved a rural payments problem using an app called M-Pesa. Yeah? So if you Google M-Pesa and Kenya, you will understand it. You'll get a lot of material. So what M-Pesa did is they built an app which using SMS, they send various codes, and you can go to any rural like shops, small shops, you can show the code and you can get money from them. So every kirana shop, as we call it, like mom and pop stores, every kirana shop, they turned it into an ATM or a mini branch for them. So somebody who's going outside Kenya wants to send money to his family, they use the M-Pesa app. They pay the shopkeeper. The shopkeeper sends a secret code, kind of an OTP to the family member. They can show it in any shop and they can get paid. And then the cash transfers between the shops is facilitated by M-Pesa. So instead of smartphones, they used just the SMS, or even people don't even need to have a smartphone. They can use a normal phone which has SMS and they can send and receive money. So this is one way which became a huge case study for how to solve rural fund transfer problems in the rural and interior parts, and where access to digital tools and technologies may not be available. So that way, the challenge is both in technology and in the adaptability. So if you keep it close to what people do in their day-to-day lives, you can solve the problems for them.
There's another question. You will have to probably answer a few more.
Sure, no problem.